Right. Good morning, everyone. Welcome to the Miami-Dade Chamber of Commerce Small Business Technical Assistance Workshop. We are getting started, and we'll get started in just a few moments as we go live on Facebook. Feel free to make sure that you introduce yourself into the chat. All these events are opportunities for you to connect, to broadcast your business. So always, we may not be meeting in person, but we still want to make sure that you are taking the time to let people know who you are, what you do. So we're going to get started at exactly 10:05. So we got about 4 minutes. Feel free to invite others, let them know we have an amazing presenter that will let us know about the best practices for preparing your business finances for taxes. So, and that's an extremely important part of making sure that you are ready to access capital, because everyone asks for taxes. You are minimizing your liability, which can help with profits. So we want to make sure that we are clear about those things. So uh, we are going live on Facebook. Right? And we are now live on Facebook. Welcome to our Facebook community. For those that are interested in joining us, you can always click the link to join in and join us on Zoom so you can ask questions, engage with our speaker, so that you can take full advantage of the expert we have on with us today. So, right. So who all we have in here today? Good morning, everyone. All right. Free to use the chat to say hello. This is our very first small business technical assistance workshop for this year. And we've been doing a series over the past 3 years, starting off with ABCs of business. Then next we talked about next level business. ABCs was focused on the basics of business. And then next level was sort of that next step. And this series is going to focus on scaling your business, the things that you need to know to take your business up a notch, to break 100,000, to access capital, to get contracts. These are the things you have to have in place in order to scale your business. So if you're interested in these conversations, we have quite a bit of support system with our one-on-one small business technical assistance program, many others to assist you in implementing what you're going to learn in this workshop to your business on a one-on-one level. So we'll talk more about our small business technical assistance program that complements these workshops as we get started in less than a minute, as we get everybody in to join us. I see we have a few businesses already here. We got Emmanuel from Caribbean Television Network, mission-driven online news media serving immigrant communities from the Caribbean and in the United States. And we have Valerie from VLB Pearl Corp. That collaborates with businesses offering services to enhance operations, streamline administrative process, and maximize efficiency. This is a virtual assistance that is in person and local here. So as we're going in, make sure you go in and chat, and we are going to start today's webinar. Again, my name is Matthew Pygott. I'm the Director of Small Business and Membership Services at the Miami-Dade Chamber of Commerce, and this is our Technical Assistance Workshop. And we have a very special guest today that's been in this community for many, many years, decades. Mr. Ronald Tompkins has taken the helm of what we call auditing and tax. He has multiple expanded his business all across from Florida, DC, Maryland, and New Jersey, and New York. He is the past president of the Florida Institute of CPAs, former member of AICPAs, the whole governing board for CPAs board of directors, and has been in South Florida since 1972. Very well respected in this community, has an extremely in-depth knowledge about business taxes. So with that, I want to bring on Mr. Ronald Tompkins. How are you, sir?
Good morning, Matthew. How are you?
I'm loving life. It is good to see you. So I'm going to hand it over to Mr. Tompkins, and you'll have the floor.
Oh, hey, well, good morning, everyone, and thanks, Matthew, for that illustrious introduction. Okay,
Awesome.
okay, and I want to welcome all those who have joined us this morning to participate in the presentation. As we start the presentation, let's see. Gina, do you have access to the slides, or am I? I'm trying to advance the slide.
All right, so let's see what's going on with that. Let me reach out to Gina. And if what we have here, all right. So I can assist with that. Let me go ahead and share my screen. All right, there we go.
Okay, I'm unable to see the slides on this end, Matthew.
Oh, all right. So it looks like we're having a little bit of technical difficulties. Let's see. It says my screen share is loading. So let me go ahead and repeat that and see if we can do that one more time. All right. All right. There you go.
Okay, well, okay, thank you. Here's some of the topics I'd like to cover. The first one is choosing a preparer. And also, I want to go over the differences between deductions and credits. We hear a lot in the news about tax deductions, very little news about credits. I want to briefly discuss the differences between the two, and also discuss some small business tax incentives as well as tax credits for small business retirement programs. And a very seldom used feature for a lot of businesses, the work opportunity tax credit. And then some of the tax incentives that Congress has put out there to provide employers for their employees who want to further their education. And then I'll close with some other noteworthy items that are going on as it relates to taxes. Next slide, Matthew, choosing a preparer. One of the things about choosing a preparer, and a lot of businesses that come in to get their taxes prepared look at preparing their taxes as the beginning of the tax filing process. But one of the things I want to emphasize today, and for those who are participating, probably the greatest takeaway I would like to have you take away from this presentation this morning is that preparing your taxes should be the end result of careful analysis and planning that has been conducted throughout the year. The end result should be when you file your taxes, and when you file your taxes, or whether you get a refund or you have to pay some additional amounts, should not be a surprise. You should kind of have a pretty good idea of what this is going to look like. And to navigate you through this process, you need to have as part of your trusted advisors people who you have surrounded yourself with that's going to navigate you and your businesses throughout this process all the year. One of the advantages of using a CPA, they not only will prepare your tax return, but the more important role they bring to your business is the fact that they, during a year, will be guiding you and directing you as to what are some opportunities to save you taxes. And one of the things about a CPA, these are people that they take 150 hours of college credits. And this is basically a 5-year program at the undergraduate level. They pass a comprehensive, very rigorous 4-section CPA examination. And more importantly, they abide by a code of conduct. Um, these are, and they also, once they are licensed, they have to abide by strict license requirements that are mandated by the state in which they practice. And most states require CPAs to complete 120 hours of continuing education every 2 years. And then they also have to obtain a certain amount of work experience. One of the things I'll never forget, looking back at my college career, I heard about through my classmates a firm that was hiring people to prepare taxes, and they were paying quite well. I went out and applied and got the job, and after one day of prepping me on how to fill out the forms, I was preparing taxes. And one of the interesting things is at this time, I was not even an accounting major. I was still majoring in architecture. And so once again, as you look at your business and going out to get your taxes done and scaling up your businesses, one of the things to keep in mind, tax preparation should be something that you carefully go into and something you prepare yourself for. And this is not the time of the year to start the process. This is a time of the year when you and your CPA should be guiding you as to what the final result is going to look like based on the plan that you have set out with all year long. Next slide, Matthew. One of the differences between the deductions and credits, when you are preparing your tax return, things that are deductible for tax purposes, these are items that save you a percentage of whatever taxes you're going to otherwise be paying. For instance, if you prepare your tax return, you calculated your bill initially to be $1,000 of taxes that you have to pay for every item that's now deductible, and say you're in the 35% tax bracket, that deduction will save you 35% off your taxes. Excuse me. Or in other words, if you have $1,000 of tax to pay, and you end up with a deduction that's say $1,000, you are saved $350 off that bottom line. So that's kind of what a deduction is. One of the opposites of that is a tax credit. What is unique about tax credits is, say you've gone and you and your tax preparer have prepared your taxes. You have a tax to pay of, once again, say $1,000, and you're available to take some tax credits. The thing about tax credits, they come right off the bottom. So, and once again, using that $1,000 of tax as an example, and you come up with deductions or savings that could give you a, say, a $350 credit, your $1,000 tax now has become $650 because you've now been able to take that $350 of tax off the bottom. The tax credit was a dollar for dollar reduction of your tax, whereas a tax deduction is a percentage reduction of your taxes. Next slide, Matthew. Now, here are some of the small business tax incentives that have been created throughout the year that you should carefully review along with your preparer if you are eligible for any of these. And one of the probably often unique deductions is the first year in which you start up or organize your business. There's some tax savings available, and they're only available that first year. And kind of to give you an idea of what those savings will look like, say in your first year that you begin your business, and you can take up to $5,000 of organization costs on your tax return, and these items that can be included in there include if you say you're looking to do a market survey prior to starting up your business and you've incurred some costs into using an expert to assist you in that effort. Also, if you use an attorney to help you draw up your incorporation papers or partnership agreements, up to $5,000 can be taken in the first year that you can write off the top. Now, once again, this is a tax deduction as opposed to a tax credit that you can take off your taxes to assist you in starting up your business. Also, and one of the things also that's often looked at is if you have any costs in trying to attract directors to sit on your board. One of the things that's often not considered by a lot of small businesses is that you can actually look out, and one of the things, if you're going to, as Matthew indicated, kind of scale up your business, look at bringing on to your business people at director level who can actually give you timely and very good advice as to how to grow your business. And the cost of bringing these people on board is also included in that startup and organizational costs. A lot of the larger corporations, they actually pay director fees. And that's probably something you may want to consider later down the road when your business gets to the point where you can afford it. But one of the things that's looked at is keep in mind these can often be people that are also in your family. These do not have to all be outside people, but people you don't know, but they have to bring some expertise and some knowledge to assist you in growing your business. But once again, the cost of bringing these people on board is all tax deductible. Also, the qualified small business payroll tax credit for increasing research activities. And once again, this is a tax credit, unlike the tax deduction for startup and organizational costs, which is a tax deduction. This is a tax credit. As businesses, as you hire employees, and including yourself, depending on what form of business you've created, you have to pay payroll taxes. If your business is engaged in any type of research activities that qualify, you can actually get a small business tax credit for any research activities that you may be engaged in. And the maximum amount for this credit is uh, $500,000. So that's a pretty hefty amount. But once again, you have to also be involved in an activity that qualifies for these research credits. Um, yeah, the third bullet there, then you've probably heard a lot of talk about this from President Biden, clean energy, and what he's doing to assist businesses with this is uh, one of the things, if you're in a business and you're in a business that decides that you are going to go to some clean energy resources, you can get up to 30% of the cost of switching over to renewable energy sources. And and one of the things to remember, and once again, this is a tax credit. It comes a dollar for dollar deduction on your tax should you decide that this is something you want to pursue. The fourth bullet there is very interesting. If you're a business owner and you actually own a building or rent a building as part of your business, and you decide to indulge in some activities that make this building more energy efficient, you're also able to get this 30% tax credit from any cost that you incur to make that building energy efficient. One of the other items there, the fifth bullet there at the top, clean commercial vehicle credit. If you decide to go electric cars or electric trucks, and you want to also use those in your business, this credit is also available for those. And that credit is also where you can take 30% of the purchase costs of the vehicle and actually use that as a dollar for dollar deduction on your tax. And this commercial vehicle credit is not only available for new truck purchases, but it's also available for any previously owned credits. But the credit on previously owned vehicles has a cap. You can only take up to $4,000 for the purchase of the previously owned credit, and the up to $4,000 of credit, and the vehicle can't not cost no more than $25,000. Um, the last bullet there on this slide is an interesting deduction that also can be taken. If you if you invest in a business and you can take and you in the while operating your business, if you incur capital expenditures, as they typically call, and these capital investments typically things like machinery, trucks, automobile, even automobiles. Um, the first year in which you acquire those assets for use in your business, you can then take up to what is called 100 capital business tax credit is a section 179. That's the IRS code that allows this, and it gives you the opportunity to take a significant amount write-off of these vehicles or equipment or trucks the first year in which you acquire them. And one of the things that's interesting about this is also applies to lease equipment or lease vehicles. And one of the things that this uh, uh, deduction allows is say you're typically able to take this credit in full the first year in which you acquire these assets. Um, and and it's often the overlooked deduction because most people acquire these, and depending on who they have preparing or guiding them through taxes, this is typically taken over a 4 or 5 year or 10-year life, depending on the life of the equipment. But one of the often big incentives for small businesses is you can write this entire amount off the first year, provided but it's only available the year in which you acquire the machinery, the equipment, or the truck or a vehicle. Next slide. Uh, a lot has been said in the news and Congress about retirement plans. Um, One of the things that's interesting, and please note for if you have young folk that you're employing in your enterprise, and as you start to probably do retirement planning for yourself, keep in mind, depending on your age, Social Security as we know it, probably going forward and looking at the future, it becomes a political football from time to time. But one of the things to note, and the reality of this is Social Security as we know it, into the future would never be the same. Um, uh, so Congress is looking at new ways to entice uh, individuals to think of something other than Social Security. So they're already starting to kind of give some incentives to businesses and to look at ways in which they can assist their employees in looking at alternatives to Social Security. And so one of the first things that I want to discuss here is if you decide that you want to, your business is mature to the point where you can now provide a retirement plan for your employees, uh, and you incur some costs in starting up those plans, you can actually take a tax credit up to $5,000 for just the startup costs for starting up your retirement plan. A lot of these plans, depending on the type of plan it is, you can you can have some type of the administrative costs can be kind of significant. And so one of the incentives that Congress has put in place to assist you in being able to provide this for your employees is that they give you a tax credit. And one of the additional incentives, in addition to starting up the retirement plan, if you give employees the additional ability to automatically enroll in this new existing plan, you get an additional $500 tax credit. Uh, and for business owners who decide that they're going to match the employees' contributions, say you start a 401k plan and the plan you provide is going to give employees the opportunity to deduct a percentage of their pay and put it over into the retirement plan tax-free. And that percentage is, say, 5% of their wages, and you match it dollar for dollar, you get an additional credit. Uh, you get 100% deduction. Now, this is a deduction as opposed to a credit on what you match to go into the employee's retirement plan. Also, one of the things about one of the additional incentives that Congress has put out there, in addition to providing these incentives for employees, business owners can also take an additional deduction for contributions that they make to their own retirement plan. But keep in mind, as you start to make retirement contributions for yourself, there are limits to how much you can actually be able to take in terms of your contributions. Um, and the interesting thing about these contributions, both for the employees as well as for yourself, um, these can be made, these do not have to be made April 15th or March 15th, depending on whatever time your taxes are due. But you can actually make it up, and if you decide you want to get some extensions on filing your tax return, um, one of the things to remember is you can actually delay the contribution up until the time you actually file your tax return. Um, um, as we think about filing of tax returns and extensions, one key point I want to make here is when it comes to filing of the tax return, the extensions are available to file your tax return, but if you have taxes due, those taxes need to be paid at the time that they are due, and if you decide not to pay them at the time they do and go for additional time to file your return, you will be hit with additional penalties and interest for late payment. Um, Next slide, Matthew. The work opportunity credit, this is a feature, an opportunity to really look at different ways of bringing on employees to your business. Um, One of the things that Congress has put out there, uh, you can claim up to $96,000 for each employee that you bring on that's available for the work opportunity tax credit. And once again, this is a tax credit, is a dollar for dollar reduction in your taxes due. And employees who qualify for this, um, typically anyone who's coming out of the military, anyone that's been on welfare, and as anyone who's been employed for 6 months or more. Um, um, and the last bullet there, I just want to emphasize this credit is available to employers of all sizes, including tax exempt organizations. If you uh, operate in a nonprofit organization and you're bringing on one of these eligible employee groups to your workforce, this work opportunity credit is also available to you. Next slide, Matthew. Employer Assistance Education Program. One of the things last year, there was a lot of going back and forth between President Biden and Congress as to, in a lot of states, whether uh, he was trying to give relief to those who have student loans and those type of things to repay. And one of the things that the IRS and that's available as part of your tax strategy is that you can get a payroll tax exclusion up to $5,250 for each employee for each year in which you provide education assistance. And say if you have employees that are in your workforce, they want to go and advance their education in terms of taking additional training at a technical school or a college. One of the things that they have available to them is that they can, as well as available to you as the employer, you can give them assistance in this area up to $5,250. Going back to the student loan repayments, if you have an employee in your workforce and that employee has come to you with still amounts outstanding for the student loan, you can assist them and provide kind of a work benefit to them up to $5,250 for payments that you make to them provide to them to assist them with their student loan. And one of the interesting thing about these payments, whether they are provided to pay off their loan or provide for an employee's additional education, these payments are not included as income to the employee. These are tax concessions that the employer can make and still have no tax effect on the employee. So these are very much some work incentives that you can provide to your employees to kind of a way to give them additional incentives to come work for you and retain employment with you. Um, and also you can receive some tax benefit from it. Next slide, Matthew. Here's some other noteworthy items I just want to cover. These are items that that I think kind of just a potpourri of just additional things I think that would be interesting to most of the participants on the webcast here today. Is one of the IRS allows depreciation in automobiles for tax purposes, as long as that automobile is used for tax purposes, used in your business for tax purposes. And one of the things that the IRS has done for the year for 2024, they've issued it in 2024, and it's effective for 2023. They have increased once again, I indicated the first year you put vehicles or automobiles or trucks into service, you can get what is called the 179 deduction. That deduction is now $20,400 the first year you place a vehicle or truck in service. And so, and that amount is increased to $200 in 2024 from the 2023 amount. And one of the things, in subsequent years, that that depreciation can also be included. And one of the things to just note there is that is a very overlooked deduction from time to time, that where that first year you put that vehicle in service, you can actually get a bonus depreciation, is typically called, when you put that truck or automobile in service. Next slide, Matthew. One of the things the IRS has also done is created what they call giving businesses the opportunity to establish tax accounts. Previously, the only, and one of the advantages of having a tax account for a business is for individuals as well as sole proprietors. They are able to establish a tax account where you're able to go into the IRS's website, so to speak, and look at pretty much all your activity, any income that all the filings you've done, all the payments you've made, all the assessments that have been made against you. But typically, these were only available to sole proprietors, and now what the IRS has done is now opened and expanded this to include partners and partnerships and individual shareholders of S corporations. One of the things about S corporations, and that may be not something everyone is acquainted with, but one of the features of an S corporation is that you are able to create a corporation that has all the advantages and all the opportunities of a corporation, but rather than pay two sets of taxes, one for your business and one for you personally, In some cases, once again, this is where whoever you have on board as your tax advisor can advise you. It, in some cases, is more advantageous that you pay taxes as an individual, even though you may own a corporation. And one of the ways in which you are able to take advantage of this is to create what is called an S corporation, meaning you're running a corporation, but you're paying taxes as if you're a sole proprietorship. That's also one of the things of interest to keep in mind as you look at your tax strategy in your business operation. Next slide, Matthew. Here's something that's not a whole lot of talk is, and this is probably not talked about as well as it should, and this is something new. Beneficial ownership information, and this is something new. One of the things that Congress as well has been very concerned about is bad actors in the international countries who are hostile to the United States have been able to start businesses in the United States and use those businesses for some uh, purposes that the Congress is concerned about. So once again, to identify whether there may be businesses or operations that have been made by foreign hostile governments that may not be in the best interest of the United States, the Treasury, which is also the division department of the federal government that IRS comes under, they have created a form that's called the Beneficial Ownership Information Form. And this is a form that's required to be filed by anyone who owns 25% or more of a business. And this is to disclose and to kind of system that they've created to weed out anyone who may be operating in the United States that may be a hostile foreign, uh, uh, you know, you know, disguising the operating under the disguise of a foreign government that want to do bad things to our country. And so Congress has created this form that's required to be filed at the time you create your business and anytime you bring on any new partners or shareholders in your business. And once again, this is anyone who owns 25% or more of that business. This is something you, if you're not familiar with it, that you may want to have a very serious discussion with your tax preparer to make sure that you're complying with the new requirements and that you are instilled in the good graces of the U.S. Treasury. Next slide, Matthew. One of the things that's also the IRS has created, and they've had an experimental project on this during the last several years. If you have been operating your business for quite a while, you're probably familiar with these IRS notices that come out. And one of the things that the IRS has determined is that they have need to redesign these notices because they're not, even the IRS commissioner has admitted that they're complicated and not easy to follow. And that, he's created a project to kind of make these more informative and more, and kind of just to give the taxpayer better information to assist them into what the issues are and how to get them resolved. And they feel also this initiative will also reduce the amount of calls that are being made to the IRS regarding these notices that have come out from time to time. Next slide, Matthew. Um, During the pandemic, we had, and I think even in the local press here, we had a lot of discussion about folks that was taking advantage of what they considered to be easy money. Uh, uh, and one of the ways in which a lot of businesses got themselves in trouble was with this employee retention credit. Um, we may notice even, I think it was in Broward County, where even some of the folk in law enforcement got caught up in this, where people was, improperly filing for employee retention credits and getting these payments for businesses that either did not exist or for employees that was done in error. There's been quite a bit of this going on, and one of the things IRS decided to do was to kind of offer a incentive to have people come clean. And so one of the things that they've done is created a voluntary disclosure program in which if you pay back at least 20% of what you owe, the they will give you some concession or allow you a repayment plan to kind of pay these monies back and then be able to remain in some cases free. Not there's some significant interest. There's some significant uh, uh, penalties to this, including sometimes you can actually lose your job, actually go to jail. But one of the things that with this voluntary payback program, you can actually avoid some penalties and interest that can be substantial by voluntarily agreeing to pay these monies back. Um, Next slide, Matthew. Also, kind of in that same vein, one of the things the IRS has done is that they have also decided that they're going to give some relief to people who have some outstanding bills that are due with the IRS, and and with the economy being what it is, the IRS has determined that in some cases people may have hardships due to being able to repay monies due. But if your income is under $100,000, and one of the things that keep in mind during the pandemic, a lot of collection notices and reminders were not sent out because everyone was experiencing some hardships, including the IRS. And so they decided that rather than just keep hammering you with these penalties and interest, uh, they're going to give some relief to taxpayers who fall in this particular category. Once again, to find out if you're eligible for this penalty relief, this is a conversation you will need to have with your tax expert. Matthew? Uh, Along the lines of the same with the automobile, the depreciation allowance that was issued. There's also some relief that's been some mileage rates. If you're using a truck or automobile in your business and you're able to get the mileage deduction for every mile you place on that vehicle. And one of the things that you find is that the IRS is from time to time increases this mileage rate, but effective January 1st this year, they've increased the mileage rate to now 67 cents per mile. Should you use a truck, an automobile in your business, you can now deduct 67 cents per mile for every um, for every mile you drive that truck or automobile in your particular business. The rates kind of get indexed from year to year, and they're able to get changed every year. And one of the things that along these lines, and this is also an additional incentive that is often overlooked, uh, is that the fact that if you use your truck or automobile for charitable purposes, say you own a business and you reach out to do voluntary work for the Urban League, the United Way, or whatever, and you go to meetings and things of that nature, or you sit on the board of a nonprofit organization, uh, and you are part of their meetings, you're a board member, and you go to those meetings, one of the things that's often overlooked is you can actually get a mileage deduction for those mileage that you travel to and from that organization for charitable purposes, and that deduction is 14 cents now a mile. Um, Next slide, Matthew. IRS is also, from time to time, have inflation adjustments, they call them. These are adjustments in which they determine annually every year how much you can contribute to various types of plans. And one of the things that they have done is they have announced how much those additional adjustments that have been made for inflation. And so one of the things that they have done is now they provided that the standard deduction for married couples for the year 2024 is now being increased to $29,200. And then for if you're single, the standard deduction has been raised to $14,600. And for head of households is now $21,900. Yeah, and so and also they've talked about the income tax brackets. The tax bracket, the maximum is still at 37% for individual single preparers, and if you have incomes greater than $609,350, those typically are the people who are in that 37% tax bracket. The other brackets that are affected if you're in, if you have a income over $243,725, the income bracket is 35%, $487,450 for married people, 32% for incomes over $191,250, 24% for incomes over $100,000, and 22% for incomes over $47,150. So those are kind of the new brackets that have been announced for this year. Next slide, Matthew. One of the things that the IRS also did during the COVID years, it allowed, typically when you file your tax return, you had to actually sign it for it to be valid. During the COVID years, one of the things that the IRS was permitting is that the taxpayers could use e-signatures on some forms and documents and returns. And one of the things the IRS has done since then, and one of the things we're noticing in the marketplace is a lot of changes that were put in place during COVID have now returned and made permanently, and this is one of them. The IRS has now made the ability to e do e-signatures, which is available for a lot of people who prepare PDF documents. Um, that you can now, you don't have to do your manual signature. You can do an actual electronic signature, and that signature is considered valid now on most IRS forms and documents and returns. The AICPA has kind of lobbied for this change for years, and now is now being made permanent. Um, Next slide. The Social Security wage base is also now increased, and the way that this gets affected to you as an employer, if you're a business owner, is that the Social Security wage base determines how much of a limit that you have to pay Social Security tax. And so that limit has now been raised to $168,600. And so this is also one of the changes that is currently now in effect. Um, Next slide, Matthew. If you are also, once again, a business owner and you have to travel, you have to do some overnight travel and say that overnight travel involves you having to take plane, train, or automobile out of town and incur hotel and food costs. Um, the the IRS allows you to be able to write those off on your taxes as long as you are doing as long as that travel is away from home with and being incurred for business purposes. So once again, starting October 1, those special rules have now gone into effect to allow you to be able to pay for those and be able to deduct those on your tax return. Next slide, Matthew. One of the things that the IRS is also kind of one of the projects that the commissioner of the IRS has put into place is we've heard a lot of news lately about the effect of AI in our lives, artificial intelligence. And one of the things that the IRS is now going to be using, having a task force that's putting in place to focus on uh, high wealthy taxpayers, and they're going to be using AI technology to weed out tax returns that may be noteworthy for review or audit, and that they're going to be using this artificial intelligence to assist them into identifying returns that would be available for audit. Next slide, Nancy. One of the things that also is overlooked a lot of times, depending on your business and whether you have employees that are that receive payments, and if you're using a lot of subcontractors in your business, and this is typically a lot in the construction trade, uh, feel most of those payments are made on what is called a 1099 form as opposed to a W-2. But one of the things that the IRS is requiring that if you're uh, paying people $10,000 or more, or paying them in cash, and cash will be any payment $600 or more, those forms have to be filed and they have to be e-filed. You cannot use a paper file. You can no longer use paper forms to file 1099 forms. Those forms must be electronically filed with the Internal Revenue Service. Next slide. So this kind of closing my formal comments. At this time, Matthew, I'll turn it back over to you. And if there's any participant that has any questions, it's been my pleasure to make this presentation, and I'll be available now to answer any of your questions.
Excellent, excellent. Thank you so much, Mr. Tompkins. That was like a masterclass cheat sheet on what you need to know to have the great conversations with your tax advisors and CPAs, if possible, to get maximized this year's taxes and tax returns. So thank you for taking the time to go through that. I hope everyone has took snapshots and taken notes to make sure that you go back and have these conversations with your tax advisors. So we're going to open it up for any questions that you have. If you have any questions, feel free to raise your hand or put it into the chat or the Q&A. It was very detailed, so yeah, it was very, very detailed. I thank you so much for taking the time. And while people are thinking about their questions, Mr. Tompkins, tell me, is there a cheat sheet, an area that business owners can go to help them that don't have any knowledge about what to expect or how to engage with their tax advisors to help them understand some of these things or learn some of the things you just shared?
Yes, the organization I've been a part of for quite a while, the American Institute of CPAs, um, as well as the Florida Institute of CPAs in Florida, they have typically on their websites information for taxpayers that are available, and they typically come out at the beginning of every tax season to kind of remind taxpayers here's some new things that are coming into play this year. Here's some commonly overlooked tax deductions and credits. And one of the things about the Florida Institute of CPAs, they actually have a hotline that you can actually avail yourself to and to you know to kind of make your inquiries. And one of the things, if you know of a CPA and you have someone that you know of that's a CPA, one of the things about most CPAs, they're available to kind of we consider ourselves want to be available, and you don't have to necessarily be a client. And a lot of times, I often run into folk at network sections that come up and want to ask tax questions and that type of thing. And so, every opportunity you get, you should reach out and don't be bashful. You're the the one of the phrases that's often said in business world is uh, it's not how much money you make, it's how much money you can save. And that starts with careful and expert tax planning. And so remember, it's not illegal to look out to determine you can only pay the minimum amount of taxes you have to pay and no more and no less. But once again, just always remember you should have in your lineup of folk who are giving you advice someone who's very knowledgeable and someone who's very knowledgeable on a full-time, real-time basis regarding tax opportunities for savings and how to help you grow your business.
Excellent, excellent. Thank you very much. I know this is going to be one of those webinars we put up on our website that's going to be cherished. People can review it and take a lot of notes. So we thank you for taking the time. Your wealth of experience definitely shows throughout. There's a comment just saying thank you in the chat, how easy you made it and simplified this information that is usually something that many business owners have a big challenge with. And they just go to a random tax person and get the taxes done, hope that they can get the minimum amount of tax liability. And you've not only shared that, but also insights into things that business owners can use to educate their employees, to pay off student loan debt, to make sure that they're making investments in their equipment and assets that can build their business and being able to get that right off. So that was excellent. I want to thank you for taking the time to join us, and you make sure that if you are interested in taking full advantage of this, you reach out to Mr. Tompkins. He is a CPA that you can his business. He has businesses all across the eastern west coast of the United States, New Jersey, Florida, New York, Washington, D.C. So make sure you reach out to him and take full advantage. And if you need some assistance in implementing many of these things, we do have a one-on-one small business technical assistance program here at the Miami-Dade Chamber of Commerce. All you have to do is go to our website, www.m-dcc.org, under our services tab, technical assistance, and get one-on-one small business technical assistance, where we can assist you in creating your business plan, your marketing plans, getting those certifications and licenses, making sure you have that financial infrastructure, you know how to develop a profit and loss sheet, track your bookkeeping, and put into place the right business habits and systems to be able to scale and grow your business. So you can visit our website or click the link in the chat. And one of the things that we're really big into that will make sure that you're ready to access capital and government contracts is generating revenue. We want to be very clear about, at the end of the day, business is about profit. You got to be able to identify what are your products and services, who are those ideal clients for those products and services, what you need to do to put those services in front of your ideal clients and close the sale so that you could generate revenue. This technical assistance is one of many technical assistance workshops that we have on a monthly basis. All you have to go to our events tab to learn more. We'll strongly encourage you to join us every Tuesday at 4 o'clock. Where we have a small business meetup. We have generally about 50 to 70 business owners, including our partners, Career Source, Miami-Dade County. We have the MD grant. There's a few grant opportunities that are currently available. One for $10,000 closing tomorrow, another for $20,000 that'll be opening up March 1st. And we're one of the partners with these institutions to prepare you. And our small business meetup is an excellent opportunity to network with other business owners and our partners to get assistance with you. So make sure you register for that small business meetup. It is online on Zoom, so you can listen in and join. And if you want to join us in person, we have monthly events. We have a professional networking event coming up the last Thursday of the month, and that is at the Urban. And then also our first Thursday breakfast, which will be at Jackson Health in Overtown. So these are all upcoming events you can find on our events page. And if you ever want to reach out to us to get that technical assistance, you can reach out to myself or Gina Ortella, who is our technical assistance manager and is in also helping to organize this. So I want to thank you, Mr. Tompkins. Thank all those who attended, Gina and the whole entire staff on behalf of our president, Eric Knowles, for joining us today. We really appreciate you. We look forward for your success. We need you to be successful as business owners. So that you can continue to create jobs and be part of members of the chamber and be clients for each other and Mr. Tompkins and many others. So thank you very much, and you have a great day. Take care, everyone.
Thank you.